The Bank of Canada today holds rate at 5%, not making any change based on its economic predictions. So what does this really mean? The Bank of Canada's monetary policy aims for 2% economic growth, seeing it as vital for economic sustainability. But this 2% growth target is based on pure fantasy, having rarely achieved it and not considering the unintended consequences of that policy. Contrary to the flawed idea that government deficit spending fosters prosperity, real wealth is created by production. Tax planning reflects the reluctance to give money to a government that doesn't produce anything that the public is willing to pay for. In our Bank of Canada videos that we've produced in the past, we've highlighted that inflation has been traditionally defined as an increase in the money supply that devalues each dollar and eventually leads to price inflation. So Bank of Canada policy is trying to fight inflation, but it's only the symptom of the problem, and it does very little to fight the root cause of inflation, and that is expanded monetary supply. So the bank intervenes to curb excess demand, fearing that it's going to lead to an eventual recession. It stimulates a sluggish economy by putting more money into the economy. The assumption that a steady state economy can avoid or prevent economic recessions is a flawed theory, and it oversimplifies a very complex system. One such evidence of these multiple factors is the increases to interest rates that have affected both people and government. In fact, the government interest costs on the debt have gone from $20 billion in 2021 to over $45 billion that's estimated to be in this fiscal year. Government debt has now ballooned and it's approaching $2 trillion. So the lack of controls in this economic experiment really makes us consider the effectiveness of these policies. They're trying to take past information and make future decisions, but they can't control how people act or react to these policies, so it's all just guesswork. Also, there's no control in this economic experiment, which means we can't tell, and neither can the Bank of Canada or the Ministry of Finance, really tell if these policies are truly effective in isolation, because there's so many other factors in the economy that might have had the same results. So at the same time, while the Bank of Canada is trying to tighten monetary policy and raise interest rates, there's something going on that's totally counter to that, which is continued government spending. So the government is continuing to stimulate the economy by spending more money, while the bank is trying to slow down the economy. So they're kind of acting in opposite to each other. The contention of Austrian economics is that the market can regulate itself much more efficiently. The economy can regulate itself much more efficiently than policy intervention. As I said before, real wealth does not come from government intervention. It comes from the market and the economy that can produce on its own. So the question remains, how are you protecting yourself from flawed policy or bad government ideas? IBCanada Group is a collaboration of independent financial advisors that was created to help individuals and families like yours take control of their financial resources by providing training and resources on the infinite banking concept. So to find out if this strategy fits your financial planning goals, find us online at IBCanadaGroup.com. Like and subscribe to this video and follow us on YouTube and social media.